All right, I'm looking at the long-term chart of oil. You can see we're starting to try and break through this last resistance zone here. I suspect oil probably is, maybe not next week. This would be a spot for a temporary pullback, but I think oil's probably going to break through this, and when it does, there's no more resistance till we get to the all-time highs at 150. And I think I can say with about 100% guarantee that is going to cause a recession later in the year. It won't be immediate, but it is going to destroy the global economy. This recession coming up will be much worse than the self-imposed recession back in 2020. Probably will be worse than the recession in 2008. Now, switching over to the stock market. That being said, I'm pretty sure that we're going to test or maybe even marginally break these all-time highs before the stock market starts down in earnest and starts to discount the damage coming from or that will occur because of the recession. And I say that because at these market tops and at bottoms, smart money generally manufactures either an exit or an entry. And by that I mean big money is going to push the market up here. I think the odds are pretty good. This is an intermediate cycle low. We're not getting any follow through yet, but as soon as we have, maybe a brief lull in the conflict in Europe, we're going to take off to the upside, and big money will, try and egg this on, so to speak, and if possible, they'll push this to a marginal new high. And what that will do is it will convince retail traders and hedge funds that the emergency is over and it's time to buy, and that we're ready to take off again to the upside. And then that smart money will use that to sell their shares to the dumb money that's buying the breakout. So they'll manufacture an exit for themselves. So instead of stopping out here and potentially losing gains, and right now trying to get out of big positions is just going to make the market go against you. It's going to create more selling panic, and you're going to get lower and lower fills. So you're going to get if you pile on the selling now, you're going to get lose more money. If, however, they can create a rally and then sell into the rally, then they will exit their positions on the way up, very near the exact top, and then they'll be out on the sidelines in preparation for the move down, which this would be the beginning of the move down into the 4-year cycle low. So it's not going to be a crash like some people think. Central banks will fight this all the way down, and I'm going to go over in depth I have gone over in depth in the weekend report how this is going to affect commodities in general and gold and silver in particular. But it will be a grind down. Central banks will fight it the whole way down. So it will probably unfold over a 1.5 to 2 year period. There'll be lots of violent counter trend moves as we stair step down. But I think, ultimately we're going to come back down to test this 200-week moving average and probably go considerably below it, simply because we've stretched the rubber band way too far to the upside. So we're going to have to overshoot on the downside during this move down into the 4-year cycle low and the recession that's going to trigger it. All right, so here's the Fibonacci retracements. I expect, once we get our rally, then I would expect we're going to probably bounce on every one of these Fibonacci retracements. And because this topped technically in a left translated, if we do make a higher high, I guess that would would technically be a right translated cycle, but I think we're probably going to undercut the March 20th low at some point here during the move down into the 4-year cycle low that's going to be due in 2024. So again, I'm going to go over this in a lot more detail in the weekend report, and I'll tie it into how I think this is going to affect precious metals and commodities in general. But be aware that the rally that is coming here pretty soon, it's going to look very convincing, may even make new highs. It's going to be your last chance to get out of the way ahead of the recession that is probably going to start by in the latter part of the year and probably extend into 2024.